Listen closely. You think the answer to making more money trading is to work harder, right? More screen time, more indicators, more trades, more sleepless nights spent backtesting. You've been taught since childhood that hard work always pays off. You probably heard it from your parents, your teachers, your first boss. It's ingrained in your DNA. Effort brings reward. This belief is a powerhouse in almost every area of life. Building a business, learning a language, or training for a marathon. But what if this classic success formula is the very reason you're losing money in the markets? What if your dedication, your relentless effort, is actually killing your profit? It feels deeply wrong, doesn't it? To hear that your commitment, the very quality you pride yourself on, is your biggest weakness here. You're grinding away, pouring sweat and time into the charts, only to see your account slowly, or quickly, drain away. You're trapped in a hustle that just doesn't work with how the markets operate. This isn't a factory floor where more hours means more widgets. The market doesn't care about your effort, it only rewards discipline and patience. This misunderstanding is the first and most costly mistake most traders make. They treat trading like a traditional job, pushing harder when they should be stepping back. In the next few minutes, I'm going to show you the 3 hidden psychological traps where your hard work backfires in trading. We're going to unpack the mindset shift that separates the stressed-out grinders from the calm, profitable traders, the ones who make more money by actually doing less. If you're tired of working hard and getting nowhere, this is the most important video you will ever watch. Stay with me, because the truth about effort in trading will shock you and change how you approach the charts forever. Welcome. This is not another video telling you to find a better indicator or a magic strategy. This is about finding a better you. The topic today is an uncomfortable truth: why hard work backfires in trading and kills profit. Every new trader starts with the belief that effort equals reward. But the trading world is different. It's a game of probabilities and psychology, not brute force. By the end of this video, you will gain 2 things: a clear, psychological roadmap of why your grinding mindset is causing emotional trading and bad decisions, and the simple, actionable steps to replace hard work with smart process so you can trade less, stress less, and profit more consistently. I've spent years immersed in the markets and the deeper psychology of traders, witnessing the same self-sabotage over and over. You're trying to use a hammer to solve a puzzle. Let's trade smarter, not just harder. Trap 1. The effort-reward fallacy and overtrading. The first major way your good intentions backfire is through something psychologists call the effort-reward fallacy. We are wired to believe that effort must lead to a proportional reward. If you spend 10 hours researching a stock, you feel like you deserve a profit. If you watch the charts for 8 straight hours, you feel entitled to a good trade. When you apply this intense, traditional hard work to trading, it creates a dangerous, profit-killing loop, overcommitment leading to overtrading. Think of a fisherman. The successful one doesn't cast his net every 2 minutes, flailing and tiring himself out. He studies the tide, watches for signs, and waits for the perfect moment to cast his net where the fish are guaranteed to be schooling. Your hard work, if not controlled, turns you into the fisherman who just keeps thrashing the water, scaring all the fish away. Here's the breakdown of this self-sabotaging behavior. The sunk cost bias. The sheer amount of time you've invested, the hard work, becomes a sunk cost. You feel compelled to take a trade, any trade, just to justify the hours you've spent staring at the screen. You've been sitting there for 3 hours, and your perfect setup hasn't appeared. Your brain whispers, "I can't let all this time be wasted." So, you lower your standards. You force a mediocre setup. You move the market's timing to fit your schedule, instead of moving your schedule to fit the market's timing. This forced action is almost always a loss, wiping out potential profits faster than any single good trade can build them up. The need for control. When you trade a lot, when you're constantly clicking the mouse and moving orders, you feel a sense of control. Hard work gives you this illusion that you are making things happen. In reality, trading is about surrendering control to the probabilities of your edge. The disciplined trader understands that the market is a chaotic system, and their job is to only act when their defined edge gives them the highest probability of success. The hard worker, tries to overpower the market through sheer volume of activity, which is impossible. They mistake activity for productivity. Compounding stress, more screen time, more forced trades, and more losses fuel stress. Stress poisons your decision-making. High stress releases cortisol, which shrinks the part of your brain responsible for complex thought and risk assessment, the very part you need for trading. When you're stressed and tired from working hard, you become emotionally reactive. A small loss triggers the urge to immediately jump back in, revenge trading, to prove your effort wasn't wasted, digging the hole deeper. This is the tragic cycle of the dedicated, yet unprofitable trader. Remember this, in trading, your goal isn't to be busy, your goal is to be right, patiently, when the opportunity is clear. If you aren't doing the right thing, working harder only accelerates your failure. Ask yourself this right now, and be honest, how many of your recent losing trades were taken simply because you felt like you had to trade after watching the screen for so long? Comment "sunk cost" below if you recognize this trap in your own trading. This leads us to the second major backfire, confusing complexity with competence. Trap 2, complexity addiction and the illusion of competence. The second way hard work backfires is through an addiction to complexity. When you feel like you aren't succeeding, your natural instinct, driven by that work harder ethic, is to find a more complicated solution. If a simple strategy isn't working, you conclude you haven't worked hard enough to understand the market's secret language. So you start piling on the indicators. You add the moving average convergence divergence, the stochastic oscillator, the relative strength index, and maybe a few custom scripts you found in a forum. You turn your clean chart into a dense, confusing mess that looks more like a modern abstract painting than a trading tool. This is the illusion of competence. You confuse the effort of learning complexity with actual skill and edge. You feel smart because you can explain what a complex array of indicators is theoretically showing. You feel like you've done your homework, which makes you feel justified in taking a trade. But what you are really doing is introducing analysis paralysis and signal noise. Simple truth: the market moves because of supply and demand. All those fancy indicators are just mathematical formulas based on the price that already moved. They are lagging tools. When you use 5 different indicators, they will inevitably give you conflicting signals. One says buy, another says wait, and a third says sell. Because you've worked so hard to include them all, you desperately try to find a way to make them all agree. You start bending the rules of your strategy, giving more weight to the indicator that supports the trade you want to take, ignoring the one that screams danger. Your complex system guarantees one thing: confusion and delayed entry, which leads to chasing the market. Think of it like driving. A simple, well-maintained car is usually the most reliable. The hardworking but misled trader keeps adding unnecessary parts, extra spoilers, 3 different GPS systems, and flashing lights, convinced that all the extra effort and machinery will make the car drive better. It just makes the car heavy, slow, and prone to breaking down. The best traders simplify until they find the single, clearest signal, and then they wait for it. They focus on price action, major support and resistance, and trends. Their hard work is applied to mastering one simple thing, not understanding 20 complex things. The effort you are putting into finding a better, more intricate tool should be put into mastering your emotional response to failure and perfecting your risk management rules. That's where the real hard work of a professional trader lies, in the non-sexy, tedious work of journaling and discipline, not in chart wizardry. Remember, the goal of trading is consistent profit, not academic complexity. Stop trying to impress yourself with complicated charts. Simplify. Focus on clarity. Less noise equals less stress and better execution. Your charts should be so clear that a 6th grader could quickly identify the trade setup. If they aren't, you're working too hard on the wrong thing. Trap 3. The ownership effect and the attachment to outcome. The third and perhaps most damaging way that hard work backfires is through what we call the ownership effect, or sometimes referred to as the IKEA effect in behavioral economics. This is a simple psychological principle. The more effort you put into something, the more value you place on its successful outcome, even if the actual value hasn't changed. Let's say you spend 4 solid hours meticulously analyzing a single trade setup. You've looked at the monthly, weekly, daily, and hourly charts. You've checked the news schedule, factored in market sentiment, and drawn the cleanest trend lines of your life. You feel a profound sense of ownership over this specific trade. Because you worked so incredibly hard on the analysis, you become emotionally attached to the idea that this trade must win. When that trade inevitably moves against you, the loss isn't just a loss of money. It feels like a personal attack on your hard work and intelligence. The emotional hit is massive. This attachment is deadly because it stops you from doing the one thing a professional trader must do: cut losses quickly and efficiently. Instead of accepting the market's verdict, that your analysis, despite the effort, was wrong this time, you start looking for reasons to hold on. You rationalize. It's just a temporary pullback. My analysis was too good to be wrong. You move your stop loss further away, or worse, you remove it entirely, turning a small, acceptable, budgeted risk into a catastrophic account-killing drawdown. This is the tragic final act of the hard worker. They are too proud and too invested to simply admit, "I was wrong," and move on. They confuse effort with guaranteed success. A professional trader, the one who does less chart work but smarter prep work, views every trade as just one event in a series of 1,000. They know their edge is based on a statistical average, maybe winning only 55% of the time. When a trade fails, it's not a personal defeat. It's simply a paid-for lesson and a normal part of the 45% of trades that are designed to lose. They detach their ego and their emotions from the outcome because they have confidence in their process. Their effort goes into perfecting the process and sticking to the rules, not falling in love with the trade itself. The hard work should be in your preparation and your rule following, not in your execution and emotional attachment. Hard work should produce mechanical discipline, not emotional investment. You must treat every trade with the cold, impersonal logic of a casino owner. A casino doesn't get upset when someone wins a slot machine. It knows the odds are in its favor over the long run. The casino owner's hard work is in maintaining the edge, not cheering for every bet to win. Adopt this mindset. Stop falling in love with your trades just because you spent hours on them. We've covered the 3 powerful psychological reasons why your effort in trading is often misdirected, leading to stress and losses. It's a painful realization, but recognizing the problem is the first step toward true profit. Let's shift our focus now from hard work to smart process. The successful trader is not the one who works hard in the market, but the one who works hard on themselves and their system away from the heat of the moment. Their effort is invisible to the charts. Their hard work looks like patience, journaling, backtesting, and meticulous adherence to a simple plan. Think of a sniper versus a soldier with a machine gun. The machine gunner expends massive effort, spraying bullets everywhere, burning through resources, and often missing the target due to panic and noise. The sniper puts incredible, patient effort into the preparation, cleaning the rifle, calculating the wind, finding the single, perfect vantage point, and then waiting for hours. When the moment comes, they execute a single, calm, high-probability action. That is the mindset you need. Smart work is quiet, systematic, and targeted. The traders shift from activity to process. Your focus must move away from the activity of trading and toward the quality of the process. Instead of working hard by taking more trades, Trap 1, Effort-Reward Fallacy. Do this. Work hard on defining your 3 best setups and then having the discipline to wait days or weeks for them. The reward comes from the quality of the wait, not the quantity of the trades. Instead of working hard by using 50 indicators, Trap 2, Complexity Addiction. Do this. Work hard on stripping your charts clean until you can explain your entry and exit rules to a child. Master that simple plan perfectly. Instead of working hard to prove your analysis right, Trap 3, The Ownership Effect. Do this. Work hard on setting and respecting your stop-loss before you even enter the trade. Your effort goes into protecting capital, not proving your ego. This shift from the stressed-out grinder to the calm, systematic sniper is the key to longevity and profit. The market is an opponent that feasts on your exhaustion and emotional attachment. The moment you are tired or stressed from hard work, you become easy prey. Let's quickly review the core lessons you must take away from this conversation. Key takeaways for trading smarter, not harder. Stop confusing activity with productivity. Trading less is often trading better. Resist the effort-reward fallacy by sticking to a maximum trade limit per day or week. Your profit is found in patience, not screen time. Clarity over complexity. Simplicity is the ultimate sophistication in trading. Abandon complexity addiction. Your job is to find the clearest signals, not the most signals. Master one setup. Detach your ego from the outcome. Your hard work is in the preparation, journaling, risk rules, not the execution. Use a predetermined, firm stop-loss to defeat the ownership effect and ensure small losses stay small. The true hard work is psychological. The most demanding work is not chart analysis. It's the disciplined, daily effort required to maintain emotional control, patience, and adherence to your process when the market tempts you to panic or chase. Remember this ultimate truth. The market is not a meritocracy that rewards effort. It's an opportunity machine that rewards prepared patience. Start trading like a business owner, not a desperate employee clocking hours. Final words, firm, encouraging tone. If you found truth in these psychological traps, if you realized you've been sabotaging yourself with good intentions, then you have already won half the battle. Here is your single, most important action step right now. Go to your trading journal, or open a new document, and write down one change you will make to replace hard work with smart process. Will you cut your daily screen time in half? Will you remove 2 indicators? Will you promise to never move a stop loss again? Choose one concrete action. Then, to solidify this commitment, like this video to bookmark this mindset shift, and subscribe for more insights into the psychological edge that separates the average trader from the elite. I want to help you make your dedication finally pay off. Thank you for watching. Trade with discipline, trade with patience, and I will see you in the next video.